We have a quick question here from Alexander, who asks what our opinion is on the impact that key fundamental drivers has on short-term intraday traders. So are the major fundamental drivers and macro market themes, are they still useful for day trading, or is it better to just focus on those shorter sentiment headlines and sentiment shifts? So thanks for the great question. It's really an answer that has a couple of caveats to it. Fundamentals um, focus on where the asset is going to go in the more medium term, while we know that short-term sentiment is mostly focused on the shorter-term catalysts. So it is true that your approach to day trading is different from swing trading in that regard. It can be very different in terms of the time horizon of moves, the sustainability of moves, which can alter the focus that you have. But it's more intertwined, I think, than most traders realize. So, for example, even though short-term catalysts provide you with reasons why certain assets are moving higher or lower on a session-by-session basis, it is always important to keep that bigger picture view in mind as well. Now, I mean, don't get me wrong, there's certainly a great deal of focus that needs to be placed if you're a day trader on short-term market sentiment. I won't be trading any type of day trade if there's not a strong enough short-term market sentiment driving asset prices. But there are two distinctions when it comes to intraday trading from sentiment that I want to make here. And the first one is that you have trading from general short-term sentiment, which might be driven by a few various factors, ranging from, let's say, it's risk sentiment, or a monetary policy decision that surprised, or economic data that surprised, or geopolitical decisions, etc. And the second one is when you are trading specific short-term sentiment shifts, which come from very significant headlines hitting the wires, when that news is also aligned with the current major macro market themes. So there's nothing wrong with just focusing on sentiment if you're a day trader. There's certainly lots of sentiment changes throughout most trading weeks, which can create some short-term moves, many of which we highlight, of course, as part of our daily videos. But there's definitely something to be said about those times when the fundamentals and the short-term sentiment are aligned with each other. So that second example we spoke about. Let me put that into context for you. Let's say that you have let's open up the Aussie versus the US dollar. So let's say that you have a fundamental upside bias for the Aussie dollar. You think that it's going higher in the medium term, and imagine that there's some US-China news where the US-China relations took a big turn for the worse. Maybe some Navy vessels got engaged in a little bit of a tangle with each other, and that sends markets in a little bit of a tailspin with a strong risk-off mood in the short term. Now, from an intraday basis, there's absolutely nothing wrong with trying to capitalize on that short-term risk-off move by selling the Aussie dollar. But that's just one part of the story, right? Because knowing that the Aussie actually has a fundamental upside bias in the more medium term can help you to firstly drastically improve your results for trades like that, because if you know that the move will be met with value buyers at some stage, that's going to mean that you're looking for shorter moves. You're not looking for something that's going to give you 150 pip move. You're looking for a shorter move with shorter targets, because you know that the overall bias is still tilted to the upside. So that short-term catalyst is moving against the overall bias, and for that reason, it'll help you to mitigate risk by not looking for massive targets. You're looking for shorter targets because you know the market or should eventually turn around. Now, imagine for a second that instead of a fundamental upside bias at that time, imagine that you had a fundamental downside bias for the Aussie dollar at that time. And now imagine you had the same breaking news hitting the wires about US and China that will obviously still put the market in that risk-off mood, but knowing that you also have that fundamental bias, the medium-term bias backing you, it'll allow you to manage that downside bias with a lot more conviction, and can allow you to squeeze a lot more additional pips out of that potential risk-off mood, because you know that it's now also selling in line with that bigger picture view. So there is certainly, like I said, nothing wrong with just focusing on short-term sentiment and trading that accordingly. But as someone who frequently trades short-term moves, all the time, I would feel really blind in my trades if I didn't have that bigger picture view of a particular asset in mind as well, to help me, better manage those short-term positions, both from a risk management as well as from a trade management point of view. So again, there's you don't have to know the fundamental bias, the broader fundamental bias. Let's say your in the medium term to be trading short term, certainly not a prerequisite. If you have the right type of short term sentiment, the market should move in a particular direction. Of course, depending on how important that news is. But I think allowing yourself to also know what the bigger picture view is will help you to firstly, like we said, manage those positions a lot better when you know that you are knowingly trading against the bigger picture view. Whereas if you're trading in line with both the short term as well as the more medium term fundamentals, I think that creates just some of the most no-brainer trading opportunities, whether that's short term or swing trading wise. So Alexander, I hope that helps with the question. Any other questions, as always, please don't hesitate to let us know.